Morning, guys. We were doing AS10, property plan and equipment. I think we have a few things pending. Let's get that over with first, and then we'll see. There's one additional question we have. Let's go through this. It's on the screen. You can check. It's not there in your book. Shrishti Limited contracted with the supplier to purchase a machinery which is to be installed in Department A in 3 months' time. Special foundations were required for machinery which were to be prepared within the supply lead time. The cost of site preparation was 141,870. Can we add cost of site preparation to cost of PP? Yes, we have seen it yesterday, correct? These activities were supervised by a technicians during the entire period who is employed. There is a supervisor who's looking after the site preparation and the overall inspection. So can we add supervisors technical fees? Okay, so this also can be added up. And what is this per month charges? 45,000 per month is our technical guy ka salary per month we have to give him. It's an internal employee who's hired to oversee the affairs of the installation of the machinery. Yeah, but related to machinery cost. What the standard says, directly attributable cost, DAX. These are DAX. Correct. Hence, and it can be added to the cost of PPE. The technician services were given by Department B to Department A. Where are we planning to install the machinery? Department A mein. This company has two departments, A and B. The machinery is going to be installed in Department A. We require some help of technical guy, and the technical guy is not there in Department A. It's in the other department of the company, which is Department B. B told, okay, take my guy, but I will not give you at free of cost. I will charge you 49,500 per month. His salary is 45,000. They added 10% margin. Add 10% of 45,000. 49,500. They told you have to pay me 49,500 because each department is a profit center. Each department will not transfer it at cost price. They will always add some margin and then only sell. Then only give some services to the other department. Is it okay? That's what is happening here. Alright. The purchase price was 1,58,34,000. Can we add purchase price to the cost of PP? A machinery ka purchase cost. Yes. But it is inclusive of GST at 12% for which input credit is available. That means it's a refundable taxes or non-refundable? Refundable. So refundable means what do? Cannot add it, but they've already included. That means what? You have to eliminate. That means, can I say this 1,58 lakh represents 112? We want before tax, which is 100. So that will be 1,41 lakh 37,500. Is that okay? Excluding GST, because since we have a credit available. 55,770 transportation charges were incurred to bring the machinery to factory site. Can we add transportation cost? Can we add transportation cost? What does the standard say? Purchase cost and any other directly attributable cost to bring the asset to the present location and condition for it to operate in a manner as intended by the management. So without incurring this transportation cost, can you bring it to the present location and condition? So can we add this 55,570 ka transportation cost? Yes. And then an architect was appointed at a fee of 30,000 to supervise machinery installation. So we have two technical assistants. One is internal, one is external. Can we add architect ka salary? Matlab fees? Yes. So 30,000 can be added up. So you just have to find out, ascertain the amount to be capitalized under AS10. So site preparation cost can be added. Correct or no? But the only catch now is what to do for that 45,000 and 49,500. Internal employee is there. He is giving some technical service. His salary is 45,000 per month, but Department B gave it at 49 per month. Should we consider 45 per month or 49 per month? Can you consider intern each? See, they might be different departments, but they belong to the same company. So if you add 49,500 unnecessarily, you're increasing a profit element. Correct or no? This is company wala transaction only. So that means what we should consider? Only 45,000. Any inter-department profit should be eliminated if the services are taken from the other department. That was the catch of this problem. Other than that, everything was same. So you will take only what? 45,000. And they told this installation will take about 3 months. Correct? Somewhere they have told. Where is that? 3 months time. So that means 45,000 is his salary per month. So for 3 months it will be 1,35,000. If you sum it up, you're going to get 1,45,00,000 140 rupees. That is your cost of the PPE to be capitalized. Fair enough? Yes, everybody? All right. We have a small concept. Let's cover that. Decommissioning and site restoration cost. One, these costs can be added to the cost of property, plant and equipment. They should be added at present value. Just write down those 2 pointers. I'll give you a small example and we'll see what it is. If you want, you can also write the journal entry. Journal entry for this cost, or it's also commonly known as DSR cost. Decommissioning and site restoration cost. So journal entry for DSR. PPE account debit, property, plant and equipment account debit to provision for DSR account. Next point you can write. Provision for DSR is accounted as per accounting standard 29. So refer AS 39 for further provision. That comes in your group 2. So we'll not be going in detail into that. If at all, if you're writing both the groups, you can check on that. How it works, how 29 works and stuff. Just write that. So this portion will not touch upon for the time being. We'll only concentrate on what is DSR. Fine, sir? The last point. Provision for DSR is accounted as per accounting standard 29. Contingencies, provisions, contingent liability, contingency. There's a small standard. It will be covered as per that. That's there in a group 2. So we'll not, for the time being, we'll not concentrate on that. I'll give you a small example. Airtel Limited installed a telecom tower on one of the high-rise building. For 200 lakhs on 1st April 2019. Useful life is equal to 10 years. DSR cost expected to be incurred after 10 years is 20 lakhs. Explain the treatment. Explain DSR treatment. So we'll just spend a minute on this and then we'll write the solution. There's a company, Airtel company. So obviously, since they are into telecom, for them to get a better signal, they keep installing telecom towers. Have you seen one of the telecom towers? You can see next to our building only there's so many. Correct or no? Correct? Next to this only there's one. Excuse me. So they'll install a telecom tower. Normally these telecom towers are placed on the road or they're installed on high-rise buildings. Normally it's not electric pole I'm talking about, telecom tower. Oh, the king like plan at Paris wala, Eiffel Tower wala. That sort of a structure. Is that okay? So it'll be like that. Normally they are not installed on the roadside but on the high-rise buildings. Let's say Airtel want to finalize one building. They saw one building in Bangalore and they want to install telecom tower on it for the signal. Building I told, no problem, install it. The tower will cost how much? 200 lakh. The life of the tower or the useful life of the tower is about 10 years, assumption. Fine. So that means after 10 years what will happen? You'll have to replace it. Yes, the tower ka life is over, you still have to replace it with another one, correct? So normally if you just check, will they just keep the tower like this, like the way we have kept camera here? It is just placed like that or it is rooted to the ground? It's firmly rooted to the ground, yes or no? Correct, no, otherwise if wind flows off then gone. Yes or no? It's firmly rooted to the ground. After 10 years, you have to uproot that telecom tower which is fixed to the building. Correct or no guys? Correct? So when you uproot that telecom tower, whether you airlift it or you hammer approach, whatever, there will be a substantial damage cost to the building because it's firmly rooted to the building. What will the building owner say? You're giving me rent, all right, but what will he say? Come here. After 10 years, no, once you do that, correct, most of my building ka will be challa pili, correct, it will cause a substantial damage. You install the telecom tower, hence it is a damage, you have to incur that repairs is what the building owner told. I will not incur the repairs. After you go, after 10 years, you incur the repairs, make it proper the way I gave, you gave it. Normally they charge, no, like some of you in PG houses and all, painting charges. You have to leave the house like the way we gave it, correct? So that's what this building owner also told. Keep that, do it properly, restore this and then go. Is that okay? That is known as decommissioning and site restoration cost. Did you get the meaning of DSR? Yes sir, site restoring. After the asset, like once you have used means there will be a damage cost. So that we have to restore. Is it today or after 10 years? After 10 years. Is that okay? Excuse me. Alright, that cost is expected to be how much? 20 lakh rupees. Now come back to the AS10 ka concept. What does AS10 say? Any directly attributable cost necessary to bring the asset to the present location and condition for it to operate in a manner as intended by the management can be capitalized. Yes or no? Unless you incur this DSR cost or this repair expense, will the building owner let you install a telecom tower on his building? No. If you can't install the telecom tower, can the management of Airtel use it in a way they want it? That means what is this repair cost or what is this DSR cost? It's directly attributable to fixed asset. Hence, they can also be added to the cost of the asset. Fair enough. DSR cost can be added. That is the conclusion. Normally, that's all they're asking in your stage. We'll go, since we're discussing, let's go one stage further. When will you incur the DSR cost? Now or after 10 years? But when did you install the telecom tower? Now or after 10 years? Now. So that means when should you capitalize? Now. After 10 years, after 10 years, asset only not there. What will you capitalize? Correct? No. After 10 years, telecom tower only gone. So what will you capitalize? So capitalization has to be done now. But the cost will be incurred after 10 years. Correct? Yes, guys? So is today's 1 rupee same as after 10 years ka 1 rupee? Is today's 1 rupee same as after 10 rupees ka 1 rupee? Or the value will change based on the present value annuity factor. Correct or no? So that 10 lakh, how much is the repair cost they've given? DSR cost? 20 lakh. That 20 lakh is a cost that you're going to incur after 10 years. Find out its present value. Let's say the present value of that comes to 4 lakh rupees. Assumption. That means only 4 lakh will be added to the cost of the asset. Since you have to increase the cost of the asset, the journal entry will be PP account debit. Present value we have assumed it as 4. So PP account debit 4 lakh to provision for DSR 4 lakh. Fair enough. But are you going to pay 4 lakh? Are you going to incur only 4 lakh as expense or how much expense? Oh no, this is 20 lakh. No, so provision, let's assume that that comes to 15 lakh. Present value is 15 lakh assumption. That means what entry you will pass? PP account debit 15 lakh to provision for DSR 15 lakh. But are you going to incur that expense only for 15 or 20 lakh? 15 lakh is its value now. After 10 years, its value will become 20 lakh. It's only on account of time value. That means the differential value of 5 lakh will be accounted as interest. This process is known as unwinding of interest. Every year you could pass the entry interest account debit to provision for DSR. For 10 years you keep on passing the entry. After 10 years, provision balance will be from 15, it will be brought up to 20. And once you incur that expense, the journal entry is provision to bank. That is your whole scenario. They're not asking you so far at least they have not asked the DSR ka problems. Since we took it up, I thought I'll just explain. Did we understand that? Yes, sir. Is it okay? Since we have written an example, we write off the full solution. Alright. So one more point you incur there. DSR cost expected to be incurred after 10 years is 10 lakh. Present value of DSR cost is 15 lakh. Then the solution. In year 1, what will the entry you will pass for year 1? You tell me. Can we add DSR cost? Can we add DSR cost to the telecom tower cost? Yes or no? Yes, because why? It's a directly attributable cost. But how much are you going to incur? 20 lakh. But that 20 lakh you're going to incur now or after 10 years? But you're doing the accounting now. Hence, find out its present value. We know how to find present value and all, no? Using annuity factors. They'll give you in the problem, don't worry. So present value is how much? 15 lakh. So that means what entry you will pass? Or telecom PP account debit, that is telecom. PP account debit how much? 15 lakh to provision for decommissioning and site restoration cost 15 lakh. And the provision balance goes on increasing every year. So that they will give you an interest rate. Let's say 10%, 12% like that. So you keep on passing the next year journal entry as interest account debit to provision for DSR. This, I think that is not required. Unwinding of interest is not required for you guys at this level. That probably they'll test you in CA final. So did we understand this? Just know that decommissioning and site restoration cost can be added to the cost of the asset. One more example could be like, some guys who are into natural gas extraction. Petroleum products, they will extract, they'll dig the ground and take it out. Correct? Some they will dig the sea and take out few things. Some companies do that. Yes or no? Oils and stuff. That because of that, seabed and all stuff will be substantially damaged. What will the government tell? You extracted your product, okay, awesome, no problem. I'll give you the permission. But make sure that the seabed is proper now. Restore the seabed and then go. After let's say you're doing the extraction activity for 5 years. After 5 years, you have to make sure that seabed has to be the way it was when I gave you. Alright? So they'll incur some cost to make sure that the level is fine. Those costs are known as what? Decommissioning and site restoration cost. They are directly necessary. They are necessary for the asset to operate in a manner as intended by the management. Because unless you incur that, you will not get the permission for the use the asset. In this example, unless you incur the DSR cost, can you use the telecom tower? Hence, it becomes a directly attributable cost. Yes, sir. If you know DSR cost can be capitalized, if you know the meaning of DSR cost and know that it should be capitalized, that is good enough for this stage. You got the meaning of DSR, decommissioning and site restoration. You got the journal entry. So that is good enough for the time being. Unwinding and all, we'll take it up later. Next year. See you final. Okay. So with this what? AS 10 ka concept is, all the concepts are done.